when every single taxi driver you jump in the car with is talking to you about how he's invested in real estate, it's time to get out. But look at this. We are getting so close to 200K on the average price in a year. It's really ridiculous.
It used to be like you could retire on $1 million because you could go put that money to work, and if you didn't have a pension, it was okay. Then it's 2 million, 3, 4. I don't know. Like, I think people need 4 or 5 million now to be able to put that to work if they want to do well and retire comfortably. And even then, if this inflation keeps going up the way it is, you got to make sure you're getting a good return on your money. Everybody, it's Kory MacKinnon again. I have kidnapped Matt McKeever, brought him up to the Citadel, and I'm taking over the channel this week, or actually the rest of the month of November. I'm more down from Sarnia, Ontario way. For people that don't know much about me, I'm an investor for the past 15 years, and I've also grown a pretty big real estate coaching business where I teach other people how to escape the rat race with real estate because it's such a powerful asset class. Today, I'm excited to spend some time with Mitch here out Peterborough way. I've known a lot of people that have invested in Peterborough and actually moved out to Peterborough for just like their principal residences, just to be closer to the action of where the GTA is going and cottage country. There's so many different benefits of being out that way. So I'm really looking forward to getting to know Mitch here a little bit more on the channel today. And he's got some awesome stats and things to share with the audience here. So make sure that you follow through and that you can actually, follow along with Mitch, because it's important as an investor or anybody really buying property in the area to really know the month over month changes, because that starts trends. And if you want to catch a trend, you need to be in touch with the right people. So Mitch, great to spend some time with you here today.
Yeah, nice to meet you as well, Kory, and looking forward to diving into this with you.
Awesome, man. Well, whenever you're ready, as well, if there's anything just interesting happening up in Peterborough here in the next month, or just trends that you're seeing, we can always talk about that as we go through your presentation or as the numbers go along here too.
Totally. I'll tip it off with, I got a bit of an overview of the points I'm gonna hit on as we slug through the stats. So I'll bullet point that stuff first and then proceed into the charts and graphs. So hopefully I can paint a bit of a picture before we get too deep into the weeds. And then I got a few sort of parting thoughts on how anybody should position themselves in this current market. So market update, we are, luckily here, we're November 22nd. So although obviously I'm running off of October's statistics, we've got a good bit of insight into which way things are heading beyond October, because things sort of hypothesis we would have had at the very end of October are getting definitely more pronounced now. And I suspect we're going to see some real dramatic sort of pattern evolution as November stats come out here. We're really starting to see things take a certain direction. So that's kind of exciting in one sense, because there's a lot of uncertainty for a long time about which way it was going to go. And at least if we know which way it's definitely going, then we can react a lot more specifically. So I'm going to go into the overview here. Inventory lower than meets the eye. I'll explain what that means as we get going, but the inventory is, as on the surface level, it's as low as it's been over the last year. But arguably it's actually even much lower than that. And I'll explain what I mean in a minute. Headed for a repeat of last winter. If you guys have been following, you'll remember that our prices ran up 100K in about 3 months flat in the new year last year. And arguably we're headed for a repeat here anytime now. So investors altering the market, end users shifting. I'm definitely seeing, this is just one that's worth commenting on right now, is in terms of sort of the cautionary warning bells. These type of things you hear. A lot of people watching this channel have read a lot of investing books. And it's these kind of old isms, like when every single taxi driver you jump in the car with is talking to you about how he's invested in real estate, it's time to get out. I just want to say that that this time last year, I was dealing with a lot of end users that were moving out of the GTA, and they were sort of knowledge-based workers that had newfound freedom in their work, great incomes. They wanted to get out of the condo life. they were tired of not having a yard, not really getting those calls anymore. I feel like 1 in 5 people I'm dealing with is an end user right now. There's the market is really feels saturated with investors. So you need to understand that competitively speaking when you're out there right now. Local first-time buyers squeezed out. It really is. I cannot emphasize enough the sort of social unrest that's starting to happen at the ground level of our market right now, because the average working person in Peterborough really has the mark. They're out of the market, and it's really starting to grow. That dissatisfaction, I'm really starting to feel it with people, where I'm wondering how this all plays out now, because you start to feel that sort of social unrest that's going to put pressure on the governments, and how they choose to deal with it is going to be very interesting when we know that there's sort of pending interest rate hikes coming here. So obviously sort of less affordability even than what we have right now. Rental market in inventory squeeze, rents reaching unsustainable levels. The rental market is no better than our real estate market right now. There's extreme shortages across the board at all price points and sort of product classes, 1-bed, 2-bed, 3-bed, whole home rentals. There is absolutely totally limited availability, and really a limited sort of acceptable product for what most people are looking for. When we're seeing divorce, splits, stuff like that, where each parent's going to go their own way, and they're used to living in a somewhat decent home, and they both got to take these separate incomes now and survive in their own, and they're just going to try and enter the rental market for a while to buy some time. The people are being totally blown away at what they cannot get for the money out there, and I think that there's some room for good quality, clean, whole home rental situations right now, as opposed to the multi-unit situations. And then
I've been hearing about people doing burrs out that way and conversions, and like they're setting new records within their own companies of what they're getting for different units. I mean, it's just the market, right? The market will bear, and sometimes people are bidding these things up, right? I mean, as a landlord, if someone offers me more, they're like, look, I'll pay like $100 or $200 more per month. We just really want this place. We've missed out on 5 other ones. I usually don't say, hey, I don't need 200, but yeah, I mean, if you want to throw $50 or $75 on top of that, we'll put you in first position, and we'll look at your application first, right? So
totally. And I think unfortunately, I guess a lot of the both the renters and even the landlords out here aren't even aware that how frequently that's occurring in other markets. Basically, the sort of rental market bidding wars. And I think a lot of people that are in this rental market, they kind of just play the standard game, run their track, they go in, put their application. If they don't hear back, they move on. But it is happening. I know people who have rented units recently, and when it's getting down to the final track, and they've posted it at price X, and there's 7 very qualified people that want it, it's not uncommon right now that people are getting more than what they posted them for on Kijiji. So as an investor right now, and even for myself as a realtor, you're constantly having to check back in on almost a monthly basis with people who are running Kijiji ads and saying, hey, are you getting responses at this rate? What did you get that thing rented out at? Because it's moving really quickly. And so for the lack of our centralized database of rental information, current market rental information, you really just got to scrounge that information up. But I can tell you, boots on the ground, that the rates are continuing to rise right now. And yeah, they're, like you said, Kory, with people splitting top and bottom units, they're getting really crazy rates. Ones that people think like, how are we getting these in Peterborough when they're so comparable to places that are much closer to the GTA? And then lastly, of course, this is province-wide, but anybody who's been watching my updates know that I follow this like a hawk. It's really my number one thing, because when I'm advising people, you just can't talk about what's going to happen next without really trying to anticipate how this government's going to deal with the levers at their disposal. And I think that there's there's some pretty big shifts that are pending to happen here. So, but we'll talk about that a little bit more at the end. So let's dive into the stats. Right now, basically, let's simplify this graph. If you guys can follow this blue cursor that I've got, Kory, you can see that, right?
I can.
So essentially, this orange line, number of new listings, you see it's plummeting. Seasonal stuff, very typical. Now that we're out of the COVID shake-up cycle, we're heading into the winter. There's just not as many listings coming on. People don't want to move this time of year. The holidays are coming up. And then we've got number of active listings plummeting in kind. But then we have the number of sales trending somewhat sideways, a little bit too much sideways, that it's not following these other ones. So evidently inventory is getting crunched here. So I'm going to elaborate that on that here in a second. So to the first point that I made on that intro bullet points there, in regards to the inventory, I want to show you something. So look at this. Months of inventory, October 2020, 0.7. Months of inventory, October 2021, 0.6. So at a glance, for anybody who follows months of inventory and most people who are really trying to track what's going to happen and how competitive the market is, what's going on with prices, this is, kind of one of our number one speedometers. You would say, hey, things are basically where they were last year. We're just kind of trending along the same way we were. Now, albeit, I will mention, even to trend along as we were, our city, as well as many others, had 30% year-over-year price gains. So as long as we're hovering around this half a month of inventory, it's plausible that we're still in the exact same situation where you could see another 30% year-over-year hike in prices. But I want to highlight something else, which is active listings at the end of October 2020, 101. Active listings at the end of October 2021, 61. We're 40% lower than we were last year. So yes, the months of inventory is relatively, or virtually the same, or the actual amount of active listings is 40% lower. So the problem is that the number of sales, see in 2020, you have 139 sales. In October 2021, you have 107 sales. The way that months of inventory is calculated, very simply, just the active listings divided by the months, the sales in the previous month, and you get that metric. The thing is that the inventory is getting so tight that it just can't facilitate transactions because people are basically paralyzed for lack of choice. It's stopping people from making transactions happen because even people who just want to make lateral moves, move up, move down, upsize, downsize, they can't do it because they can't jump from their current shell to the next one because there's such a lack of options and they're worried about getting blocked out, losing in 3 consecutive bidding wars. So they're just holding on from transacting at all. And then also even a lot of investors that were semi-hot on the chase, it gets so low that they know that every single listing that comes up right now is just going to get smashed with 10 to 15 offers and it's going to break a new record. People decide they're all going to take a bit of a pause. So the sales kind of get checked in kind when the inventory gets this low. So really we are at just dismal levels of inventory here.
That is, I don't have all the stats on year over year. If you looked at the last 10 years, this has got to be the lowest months of inventory ever in the market. It's it is crazy.
Like a lot of you're hard pressed to find any other periods where consistently you stay this low in terms of the months of inventory, and for it even to continue to stick around where it was when we had 40% more inventory last year. Still, even when it gets this compressed for how much lack of choice there is, a lot of people are going and sitting on the bench and saying, hey, I'm going to wait it out for a while. But there's still that many people that are so desperate to either find a way to make their money, keep making money, or just to actually get a dwelling and shelter over their head, that they're still willing to compete in this, barren market. That it's hard because, there's going to be this reflexiveness where whenever, if ever, in our near future, the inventory goes up, we know that it's just going to get whacked right back down in kind because there's so many people that are just taking a breather right now because it's impossible to transact in this climate.
Oh, we know that the inventory is not going to double or triple overnight. And if on your slide there too, it also showed the over asking, right? So people are still paying it. It's going 10%, over asking more than last year at the bottom of the spreadsheet there. So.
Yep. And look at this. I mean, this right here is just, look at average sale price, October 2020. Now, arguably, this was before things really went kaboom, because for us, that happened after the holidays last year when it kind of went off like a mushroom cloud here in the prices. Yes. But even still, up until when we were analyzing this more recently, it looked like we had, 100, 125, 150K gains. But look at this. We are getting so close to 200K on the average price in a year. It's really ridiculous, because this as a percentage is being multiplied across, when you're looking at higher end properties too. A lot of the people who have really won on the appreciation side of this are people who were holding stuff last year that was worth $750,000. Now it's 1.1, some really big appreciation gains there. But, and obviously you could do no wrong on a BRRRR on any brick bungalow in Peterborough last year if you bought in, and you just look at these average stats. You didn't matter. You could analyze the deal every way you wanted to, and realistically, you got gifted a winning BRRRR by this market. And
anybody that started conversion, it took them 6 months. I mean, you already got a huge
100%
on the appreciation side, some free money.
Exactly. And arguably we're positioned that, because last year people were going, how am I going to pay 487, 500 for this little brick bungalow that a year ago was 400, 415? How am I ever going to make any money when it's at record highs? And then if you could have gave them the crystal ball and let them look at it and show them right now that the average price is 659, and that they should have bought 4 of them instead of waited for it to crash like they said it was going to. And because the thing right now is, of course, a lot of the BRRRRs, and we're with clients all the time right now trying to analyze this stuff too, and going, where's the upside on these things? And obviously the upside is that we've got the government in-house that's there right now, and they're totally trapped, painted into a corner with these low interest rates. And I mean, it's very plausible that this number is just that in no time, this is going to, average price, it's going to crack 725. Where's the ceiling, right? So we could talk a bit more about that after, because of course we know that we can't see these pace of gains infinitely. But in the short term here, it's absolutely where we're poised to go.
Well, before this one, we were talking Milton market, right? And Milton market has also gone crazy, the opposite side of Toronto, and 3-bedroom homes went from being $1 million to 1.6 million, just for like just your average 40-foot frontage, 90-foot depth, newish kind of 1-car garage homes, right?
It's crazy. It's created a whole new class of wealthy. Anybody who owned like a mid upper size single family home in the last a couple of years, because like you said, the people that own these little brick bungalows and the BRRRRs, they won, to the tune of 100, 200 grand sometimes. But anybody who's sitting in something already that was closer to $1 million, a lot of these people, saw $300,000-$400,000 gains in a year, right? Which is, you just can't find those anywhere else right now, so predictably. But so here's just another sort of iteration chart form of the same thing. Basically looking at new listings. Look at our new listings last month, September, and then the steam just ran out of it. That little, this is the extent of our fall market. This is our little blip of all of the real core end user baby boomers who are waiting to cash out and sell and not rebuy, and planning for the perfect time, waited for that fall market, and then now they're gone. So what's left of the story through the winter here? All these people, all these boomers who are the only people bringing net inventory to the market right now, because we don't have a lot of new construction. So the only people from a total inventory outlay perspective right now that are bringing inventory to the market are people who are selling and not rebuying, and that's our boomers who are kind of snowbirds. And look at, they had their pick of when they were going to sell. Any of the ones that didn't sell in the summer, here's our little blast of listings in the fall, and it seems like now everyone's heading down south for the winter, and it's just going to be a dogfight, I think, for the next 3 to 4 months.
Second lowest month versus like peak lockdown, right, back in January. of
Yep.
last year. So
Yep, exactly. So, and October is typically a pretty strong month, so it's really scary. So I think I don't want to beat that picture to death, but I think people are well aware of what I'm painting there, that this is really getting down to a crazy squeeze. That just graphically, there we are from last year. You can see in proportion to all other jumps in previous years. Even look, when people like 17 was crazy. Everyone knew 16, 17 was a crazy run up. And then look at this bar, towering above the rest. So let's jump into the county a little bit now, because the county's in a little bit of a different scenario. They're not quite in the exact same squeeze. Their inventory is a little bit more healthy, but it's a very broad spectrum, so it's hard to analyze it at such a bulk set of statistics. But what I will say is that what we saw happen last year is that for a very, very long time, the county of Peterborough was hovering around 3 months of inventory. It was not around this 1.5, 1 mark. But then when the city, obviously everything it's a continuum. And so when the city got so compressed, then obviously everybody started reaching further and further to the outskirts. And so when these little like modular homes in Apsley started to go for multiples of what they did prior year, it started shifting everything. In the waterfront, there was a huge appetite for the water last year, and it carried right through the winter months when people couldn't assess the quality of the bay they were in and all types of things that would be ill-advised in a normal market. But I think that when you look at the inventory trends here, it's kind of just going sideways in the county. But I do believe that if we were to make a prediction that through the winter, we're going to see it get crunched down again. One, because obviously our little blast of people trying to sell their waterfront and rural properties before the snow hit is gone. And two, when the city gets as squeezed as it is, all the actual residents and end users will start going 45 minutes any direction just to try and get something. They'll start moving the prices in the county even further, even on really marginal stuff. And then the race is on there as well.
Big time. It's interesting to see the number of expired listings. It's when you compare the number of expireds to the new listings, I mean they're maybe people are just deciding to take it down and relist it, wait for the spring.
Yes, you know what? I'm glad you said that, Kory, because thank you for bringing that up. That's an insight that I think is useful. And the reasoning behind that, I would say, without analyzing it too hard, is we had a handful of our own clients that basically they had the "my neighbor got this price, I want that price" kind of mentality, where basically everybody with anything anywhere near water.
Help me win the lottery too. You didn't win the lottery, I'm taking it down.
Yep, 100%. That's exactly it. Where they thought like, I want $1 million or I'm not selling, and it's just some kind of it would have been, someone would have laughed at them if they had said that a year before, and then this year you thought it might happen, like you'll never know unless you try kind of thing. And people would try, they didn't totally ring the bell and like you said, win the lottery. So they said, well, the inventory's still low, I'm just going to take it down and try again. So some of these expireds, you'll probably see a lot of these people resurface because they entertain selling, but this is just the mentality out there, is that the expectations of sellers, especially in the county and on the water, are extremely high. These people aren't letting go of these things unless it's like, I'm retiring at the age of 40 kind of money,
Wow. And how far out does the county go? Would that include Lindsay or?
Yeah, the county, well, not Lindsay for us. The county is very large, but you can actually see it right here on this first slide. So you see Lindsay is a little further west. It's outside of us. Yes. We extend up. See the Selwyn sort of cuts through. You've got Chemong, and then Buckhorn, Pigeon, and it cuts up through the middle there. And the west of basically, well, obviously I can't zoom in there. Really at Peterborough's western boundary there, it just extends north, and we have a very north, very sort of very wide area up there, and that's the hard part. You start including Apsley, we have a lot of waterfront, and there's no such thing as an average listing in our county, because when some of the homes in Havelock or the homes in Apsley that aren't on the water they just are in no way, shape, or form comparable to the homes that are on the water. But there's about an equal amount of each type of property being sold. So you have this real big, you have places up for $2 million, and then you got places up for 400,000.
Yeah.
There's not as much of that middle ground. There is, of course, but it's more a market of two extremes when you get looking out into the county.
Appreciate that. I learned a bit about the county there too.
And also looking down here, so our county is on the north side of Rice Lake, and then once you get really south of sort of the end of Rice there on 28, we're into your more Bailey-Borough, Cobourg, Port Hope. That's sort of that turf. But we do still encompass a lot of this sort of Millbrook. This is more like a GTA-ish commuter area. Millbrook's really blown up in its own right. You could almost do a deep dive just on Millbrook alone, because it is sort of like a little commuter hotspot. And all along this track, as long as you follow this highway right out into, even Norwood's had a real big boom because the highway access is so easy. Yes, it's quite far east for most people when you look at it on a map. But it's just very easy to jump on well-maintained roads and jump down into the city from there. So the boom is continuing to blast east down 7 in terms of where the property values are going. We've seen the move in Havelock even, and it's where when you leave our county, like Marmora, Madoc, though, that's still where really the boom hasn't made it. So for people out there looking for geographically where there's still opportunity, the prices out here are still cheap because it's kind of no man's land. It's just outside of how far people are willing to drive. But obviously, as things continue to move here, I would say they're very risky, because if things ever do get a bit of a reset here, these areas are just, in the long run, not that desirable for any kind of commuter. But right now, people are starting to push this way. I'm not going to go too deep into the rest of the county stuff, because what we'll do here is just kind of, I'll go over a few of my ending thoughts there, Kory. Covering the worst case scenario right now. Kory, what are your thoughts on what do you see happening here in the next 6 months and the next year with, a potential series of interest rate hikes, or is the government just kind of giving lip service and trying to curb the sentiment with their words, and then how do people cover themselves? So I got my own thoughts on this, but I really think anybody buying right now, there's a risk in being out of the market because you stand to miss out on another 30% price run up in a short period of time. But I mean, it's hard to argue that there's not a risk in buying right now if you don't have a long-term play that where
sure.
you can cover a real storm for the next year or two,
Well, here's what I do know. I left my crystal ball at home today, so I don't have the crystal ball. But for people that thought the past almost 2 years have been a pretty wild ride, and they're like, oh, I think we're coming to the end of it. I'm like, I don't know. I think 2022, winter is definitely not over yet, and we're not out of the weeds. Our economy is not repaired or fixed or anything like that. So I think we're going to see a lot of uncertainty still in the market, right? When we look at the month over month and the different trends, and people can travel now. So the summer was a little bit more slower, but the year before it wasn't, and so I think there's going to be a lot of interesting things happening in 2022. Yes, interest rates will be going up. Maybe that will soften the market, right? It'll actually bring things back down to reality where more people can still afford that house and they don't have to be renters. But if not, then I'd still see that the rental market's still going to be very strong. It's just everything's been inflated, right? So if the government says that there's been 4% inflation, I don't know, why did my organic strawberries that are in my fridge right there, they went up by 20%, right? So niche things and things of value, things that people really want, going up by 10, 15, sometimes 20%. And, we're hoping that they're going to come down. But with all this money that's being printed into the system, that's great that we've got all this equity and all this, printed money, but the money's not moving. The money's really not, the velocity of the money is very slow. It's just kind of sitting stagnant. So really, we need to see the economy start moving more. And I still think there's going to be a lot of wild cards happening here in 2022, 2023, because, we're not out of this yet by any means. Those are just some of my general general thoughts here.
Yeah, I agree with you on that. And I think that a lot of people that I'm talking to right now, they're obviously, most people are trying to cover themselves on a cash flow basis. In my mind, the worst case scenario is a situation like what you had out west, in like the 2015 sort of oil price collapse there. Because all the jobs left the province of Alberta, and so the people left with it. And then the problem is that the property prices collapsed, but the rents collapsed in kind.
People are upside down. If you don't know what upside down is, it's where your mortgage is higher than what your property is actually worth. Like I've got friends out that way, and like they wanted to refi, and like they couldn't do anything with their income properties. They just had to wait it out, and finally they kind of crept back up to where it used to be 5 years ago, just this summer.
Yeah, and in the time in between, I owned a property out there myself, and at the highs, I was renting it for about $2,200. 5-bedroom, 3-bathroom place, and then in the worst of it, I was down to like $1,700 a month, and at that point, I was in the red, like $250 a month. So that is the thing that I think is worth some conversation here. Is let's say that property prices were to collapse. Let's just go down that road. What happens with rents in Ontario? I think that when you have a government that needs to try and increase GDP any way they can, and they're stifling all of our province's true core industry, automobiles, no growth there, forestry, oil and gas, you name it, they're really anti-producer of anything. And so how is this government going to continue to grow? We got this big green bottleneck going on right now, and arguably I think that they'll never come out and say it, but they of course understand how with every new resident that comes to our province, that they bring a little bit of new prosperity with them. And so I think immigration rates will continue to rise. And so even if the property prices were to drop, our net amount of units still isn't going to increase, and it would only even disincentivize builders even worse. There's already enough red tape on builders, let alone you take away their profits. It's gonna curb the new construction, and then arguably you paint a scenario where rents just go even crazier. Because we still have the new populace coming here at a very rapid pace. We don't have any solutions in sight in terms of the construction in this province. And then
there's got to be a breaking point, right? Like right now, the government just doesn't have enough incentives to create more units, for our increasing population. And I went through this with, we're converting a church into 29 apartment buildings. CMHC didn't like our program for affordable housing just because it wasn't big enough. I'm like, it's almost $5 million, so this isn't big enough. It was pretty clear they wanted to keep the money more out to the GTA. And then my friends that are building things in the GTA, they're like, our development fees are absolutely ridiculous. When they shared them, it was like to build a 8-plex was $500,000 in development fees. I was like, where is the motivation to actually get more units on the market? And then they complain like, oh, rents are too high. People are getting kind of, I don't like to use the term, but rent evicted out, and the unit gets refreshed and gets put back on the market. And there definitely could be some better leadership around the country just on like what should we actually do to make sure that we can continue to thrive and have the housing and the rentals that we do need.
Totally. So that brings me to the bottom point. I'm glad you mentioned that, because that sounds like a really cool project you're talking about. Is at the end of the day, when I talk to people and kind of doing strategy calls, everyone's trying to, snipe at some low hanging fruit here. And, a lot of people, like you said, there is a lot of, some of the ways that people are taking large multis and turning them over the tenant base to up the rents. Obviously extremely unpalatable conversations in this environment, because we are really in the middle of a crisis. It's nothing short of a crisis. Like if you live in a suburb somewhere around the GTA and you're insulated, you might not see it as much. Peterborough has a very sort of, a downtown core that's kind of lively, and the homelessness is really going through the roof, and it's no joke. It's a real deal. Like people are people are becoming disheartened with this situations. And if you want to think about how to win in this game from a holistic perspective, not just how do I make money, but how do I make money in line with what the world needs right now, it's new units. Like, find any way that you can to get new units created. And that's the kind of thing where I think that people who are out there, like you said, budgets of $5 million and stuff like that to get these projects going. And if they think that that's small, if you see an opportunity at a project and you yourself as an investor only have a budget of $400,000, $700,000, and you feel like you're having to find ways that almost seem unethical in order to get a profitable investment, realistically, you probably need to start partnering up a little bit deeper and join as a part of a team, like somebody like with yourself, Kory, and people who are a little more experienced, continually looking for inflows of money and partners to help with certain parts of the deal. I think a lot of people in this environment need to stop trying to go it alone, because we do need more creative plays at creating units. I think that's how everyone wins in this thing. And so that the one play to that end is that there's a lot of insight we can gain from the global market right now. Obviously, the housing pandemic or crisis has been playing out in California for years. We don't have a monopoly on this crisis, and recently there was a statewide bill passed that in one form or another allows all single family residences to be zoned as a fourplex within a set criteria. And obviously one of the
wow, and that's California?
California, yeah, look that one up. It's absolutely, like, there's senators city by city that are trying to fight it tooth and nail, because obviously the NIMBYism is like whoa.
Yeah, I mean,
and
help
how
us
they
out in other ways,
roll
right? Like, you're making it tough to develop or making it expensive. So, I mean, come up with better alternatives for us, right?
That's like an end of the line solution, because the nuances on how they how to protect from an absolute like speculative boom on single families happening there right now is huge. And they're putting things in place to protect, to make sure that, like, you've been a resident of it for X amount of years, you still live in one of the units even after you develop it into a 4. But nonetheless, that is a massive floodgate of opportunity that's opened up there across the board. And there is a similar thing that has just happened in, I believe it was New Zealand, that I read a Globe and Mail article on. And it was actually the opposition party that was instrumental in sort of facilitating that and passing it through their house. And so what has happened now, we have 2 major places that have basically like swath zoned single family stuff into multifamily eligibility. And that, of course, because we saw a couple of years ago, the secondary suite development in our area, we are well aware that certain cities have embraced the garden homes and then sort of reversed on that. But obviously it's the next thing down the pipeline. So I think anybody looking at single family plays that are, marginally profitable right now, if you look at something with a big side yard and a big back lot, that's a recurring theme among people who are looking to the future right now. So the large multis, the mid-sized multis, there's just no return in them. Like, every time we get a call for somebody, I want a duplex, I want a fourplex. There really isn't a lot of ways to make those profitable that aren't almost unethical plays.
Well, sometimes you can, maybe just an extra idea is, and I'm not sure what the short-term or medium-term rental market is like in Peterborough, but we've been putting our portfolio is about 80 units right now, and it's going to be over 100 once that development's done. But
beautiful.
We've been leaning into like converting, more of our units into not Airbnb units, but we do medium term. So we go 1 month to maybe 6 months. I've got one tenant who's been one of our furnished units for 4 years. So, we put some nice furniture in there, and we typically get 50% more rent. And, we're dealing with people that are like, their house sold too fast, their house is taking too long to build. Last year was actually snowbirds that couldn't travel because the border was still restricted. And they're like, look, I'm just going to go to the city that my grandkids are in, and we're going to go get an Airbnb for 3 months, 4 months, and we're just going to spend more time with the grandkids. Right.
Yes.
So you get these different situations, short-term work contracts. So that's what we do. It's been working out really well. So I would challenge people like, hey, if you got a fourplex and there's good soundproofing in that building, try furnishing one of the units, and see how that goes. That might get you into a better cash flow position.
How did you go about, are you managing the leasing and everything of that totally through your own channels? And then how are you avoiding, like, in terms of your setup, you're going out acquiring the tenant, are you going through Airbnb, or are you going through Kijiji Marketplace ads? And then what do your contracts look like on that? Obviously, because that's my next thing, is alternatives to landlord tenant board. And obviously everyone's running scared, rightfully so, of getting into any of the standard 1-year lease arrangements
Totally.
right now.
Yeah, we've been doing this for about almost 5 years now, and I'm not worried that if we have something longer than 28 days, that now we're into the Landlord Tenant Act. I could be saying, okay, we're going to do this a month at a time. I'm only going to give you a 28-day, 4-week lease. We could do that. It's extra work, but the kinds of people that I'm working with, we're working with like placement agencies. So usually I'm dealing with like the owner of the business that they work for. And if that person, has a party in the unit, the owner's like, you're on probation, like go home, see your wife and kids for a couple weeks, and we're putting someone else in. If you mess up again, you're probably be fired. So there's a lot of leverage, and I like that. So we're just putting them on Kijiji. We make sure that they're marketed really well, pro photos. We do Matterport tours of them as well. So we can actually say, hey, here's a virtual tour, go check it out. We had to do that during lockdown, because it was just so hard to do showings. People didn't want to, come, and they were worried and everything. But make sure you're in a city where there's a demand for it. There's a lot of great projects happening in Sarnia and London where I invest in, and there's a demand for these furnished units, and it's been very good. It's been a big game changer in my portfolio. We insource all the management, so that's kind of my specialty. I'm kind of like a manager by nature anyway, so I've just made given my systems, put them on someone else's desk.
Nice.
And they go and run the show.
Yeah, we had some great overlap there on the point of basically hyperinflation plays in large single family stuff and baby boomer rentals. There's a lot of people that we've seen firsthand that are going to downsize in the last year, and they really want to know how much they've got to play with in selling their kind of long-term home. And how to plan for what's next. So they're selling first, which for most people who are sort of move up buyers in this market, they're going to buy first, because it's harder to find something you want to buy than it is to sell your sort of entry level home. Yes. But all these people who are kind of on large estate properties and stuff they're moving out of their final long-term home where they raise 3 kids and all this stuff. It's a longer sale process. It's a little bit more questionable what's going to happen with price. So they're selling first, and then they're getting stuck. They're go down south for a while. Oh, we'll have 6 months to shop, come back and find that maybe they still haven't found something, and then they go to rent. And these are some really great renters that would have amazing rental budgets. And like you said, they've sold all their furniture.
I think at that point, it's almost like you have to, things come full circle, right? Like in the beginning, at least myself, and I'm not sure your full story there, Mitch, but I was kind of living that FIRE movement. I was like house hacking. I was like trying to keep my expenses as low as I could, made good income. Now I'm investing, and, I see what maybe some of these people might do is look, okay, they sell their main nest egg, which was their principal residence. Maybe they got to go be an expat somewhere and go live in, Mexico, or, you name the country, Belize, Costa Rica, where their money, it just doesn't cost that much to live every single day. They can still come back here and visit, Airbnb or whatever for the other 6 months of the year. Or if they totally want to give up their citizenship, they can just go stay in Mexico or wherever they might be. But, I think later on in life, people do need to be a little bit more frugal if they don't have a big enough number, right? It used to be like you could retire on $1 million. Because you could go put that money to work, and if you didn't have a pension, it was okay. Then it's 2 million, 3, 4. I don't know. Like I think people need 4 or 5 million now to be able to put that to work if they want to do well and retire comfortably. And even then, if this inflation keeps going up the way it is, you got to make sure you're getting a good return on your money.
Totally. You need some sort of reverse acronym. It's not the FIRE, financial independence, retire early. It's sell your $2 million
fire
home.
Extinguisher.
Sell your $2 million home in a climate of massive hyperinflation, and then realize it's not actually that much money. And how do I survive the next 10 years? So it's like they have that sort of frugality and they don't necessarily want to get back into buying something. So I think there's a good pool of premium baby boomer, like midterm renters out there that would entertain renting something if there was quality stuff that appealed to them. But there's just not a lot of stuff that's big enough, nice enough that's out there. So they have to go find other solutions. So that's sort of some of the creative ways around this for sure. Yeah.
We could probably do a whole other episode on what to do if you're a baby boomer wanting to sell out of the market, because it's just, there's so many of them, and not just their houses, but their businesses and everything else too. Any last thoughts there, Mitch? Any cool things happening in the market? Any clients that, got a good deal, or someone that had a great sale, or just things that are happening in Peterborough here over the Christmas time?
Oh man, we are, it's tough. Not a ton of overwhelming success stories lately. I would say that we see, right now, I mean, obviously all our sellers are having a heyday. We do get a lot of people looking for large and mid-sized multis, but they're very few and far between. A lot of the ones that out there are not returning that well, where we are really starting to try and shift everybody towards these more creative plays. So Kory, on our end, it's myself, Mitch Cleary, it's the Cleary team. So we started a team last January. We just brought on a very talented buyer's agent who is, he's one of these types that is invested in himself, awesome. paid courses to go and understand how to invest. He's investing actively, and is totally, just loves working with the investment clients. And we're talking strategies right now that we still foreseeably for the next while, we think it's a safe play. We're seeing people get some really great returns on off water rentals, not on water. There's too much of a premium being paid on water. And I did a bit of a podcast with Rebecca Lynn Matheson there about this a while ago. And I think that the off water, like river stuff around here and water access, are really still good plays where you can get stuff that we're seeing people get the net income on what they would on, like a fourplex in town here in 5 months on the water.
That's crazy. I had one of my coaches, actually, he's not even one of my students. So we've got 5 coaches in our program, and they bought a, property, needed a full refresh out in Buckhorn. And they spent 50 grand, they did floors, paint, fixtures, maybe a kitchen. I'm trying to remember, a couple windows, and they got this thing on Airbnb. And like literally in June, right when things, opened up again, there wasn't any restrictions on short-term rentals. They, in 1 week, I believe, I would have to talk to Riley, but they got $56,000 in bookings. Like they basically booked up the whole summer. It's gonna perform over 6 figures. They got a hot tub. They did everything right. One of the people on their team literally wrote the book, Airbnb for Dummies. James Sevick is his business partner on that one.
Yeah.
And it's like, you can do very well. You don't have to be on the water. You will pay a lot to be on the water, both as a renter and as a buyer.
Yeah.
Do you want to be woken up with motorboats on the water? I mean, as long as you can get there fairly quickly, like that's usually what I look for as a father.
Yep.
Taking my kids places and stuff like that. Can I, let's get in the car and go for a short drive. And if there's parking, that's great. And we'll just go check it out.
Yeah, so I think anyone who's open to that kind of stuff, that's really where we're excited to help people find solutions right now, because we think that it's a viable, we can actually onboard somebody who wants to chat with our team and have them realistically in something that's generating cash flow, within a 6-month cycle here. Whereas a lot of the other stuff, people that are looking for sort of the in-town multis and a lot of these sort of the burr plays, as we talked about earlier, they're a little more risky right now. They're based on continuing inflation, and arguably the beautiful part of those off-water purchases and short-term rentals is that they are really the biggest winners in all of this appreciation that's been seen out there, because you get into anything 4 units plus and you're being analyzed on a cap rate basis for values. Of course, the cap rates have gotten crunched down so much, the property values have still gone up. But someone who owned an equivalent amount of single family home in dollars saw a way larger gain than somebody who owned something that was in divided into multis in units. So you want to reap the best of not being subject to landlord tenant board issues. Getting something where you can reasonably compete in this market. There's not as much competition in that sort of off-water stuff. There still is, but it's not as intense. And then still be able to see the upside of all of this inflation that we're facing right now. I think that's sort of that's the best play that we see. So if anybody wants to chat about that, we're more than happy to help people out there.
Amazing, Mitch. Well, hey man, this has been a great way for us to connect. I'm looking forward to connecting again and staying in touch. Obviously, all of Mitch's contact information is going to be in the comments, along with mine here too. We got another one here coming up, so we gotta start jumping. But Mitch, thanks for your wealth of knowledge in the area, and for people that want to stay in touch with an investor-friendly real estate team, or even just end user buyers too, don't discount that. Make sure that you're staying in touch with Mitch.
Awesome. Thanks so much, Kory. Great to meet you. Thanks for the discussion, and look forward to catching up with you in the future.
All right. Be amazing, everybody.